The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And we're going to give you the lowdown on, on all kinds of things. Whether you haven't filed your returns, if you haven't gotten your refunds, if you're worried about next year, this is a place for free tax advice. We want to help you. We try to keep it simple. And we love to hear what you have to say. So our phone number here in studio is 803-0930, 803-0930, star 930 on our cell phone. And I'm joined in studio with Christopher Fabian. Hey, Christopher.
Hello, Esther.
And I understand Mrs. Fabian's gone.
Mrs. Fabian should be heading to the airport in about 15 minutes.
So she's leaving you.
For the
weekend.
For
the weekend, though, right?
Yes.
That's good. And so this is like, it's always open mic whenever you want, any questions you have. But we kind of always have a thought for the day, and we're going to talk about how all the different kind of incomes are taxed, because you'd be surprised. Some income is not taxed, some is taxed at a lower rate, some is partially taxed, and we hope to clear up some of that. But before we do, Chris, let's talk about our tax school.
Right. Our annual tax school's coming up, starts in the middle of October, meets 2 days, 2 evenings a week, 3 hours each session, class in West Seneca, Amherst, and Niagara Falls this year. And we also have our online class where, you can do it right in your underwear, as you like to say. But you'll learn a lot. It's a great opportunity to lead to a 3-month career. I mean,
and that's true. And it really, because what we do is we will train you so that you can become an enrolled agent. You have to have the gray matter, but we're going to try to stick it into your brain. And if you become an enrolled agent, in effect, you are looked at as a CPA in the same status from the Internal Revenue standpoint as a CPA or a tax attorney. So that means that you could go anywhere in the United States and get a job at any accounting firm, CPA firm, at the Internal Revenue Service, and that's what we are offering. It's not just like we're looking for people to just fill in for 3 months. We hope we get married, kind of. We want to have a relationship with you, and hopefully that after 3 or 4 years you're able to, or 5 years, you're able to pass the enrolled agents exam, and then that would give you certification in the tax industry to get a job at many, many, many firms across the United States.
Right. Oh, it's a tremendous opportunity.
And it doesn't cost anything. I mean, that's the really cool thing.
Yep.
We don't charge you for what we teach you, because we kind of greedily want you to work for us, and we hope that you stay with us, and then we want your knowledge so our clients get the very, very best tax help that they possibly can get. Yep. The other thing is we have the super seminar coming up at the end of October with the financial guys.
Yep, October 29th at the Millennium Hotel. We're going to be there talking about individual taxes. You're going to be talking about business taxes. Our healthcare navigators are going to be there to help you with healthcare. Mike and Glenn's people are going to be there for talking about your finances and retirement and all the other fun stuff. So it's going to be a great learn. If you walk in there and you don't learn anything, there's something wrong.
Yeah, and knowledge really is power. There's like 2 very powerful things: knowledge, and then making yourself do what you learned. Right.
Right.
I mean, because you can know it and not do it, and then that's no good. Because you got to be able to put your feet to what you have learned. And then that's what fulfills everything, brings it all to fruition. And that's what we want to do. We want to get you so that you know, or at least sit with people that do know and they can help you. And it's so important to team up with people that are in your corner.
Yep.
It's
someone who looks out for you.
In this high-tech world,
Yes, definitely.
The other thing is, the other day, BEN called you about Donald Trump's returns, right? And why would they want to know about Donald Trump's returns?
Well, because he hasn't turned them over yet. So people want to see what his income.
And the whole thing is, it was so great because there can be an individual tax return, which really isn't going to tell you much about if he has a bunch of corporations. If he's got 400 corporations and they're all C corps, they're not going to be reflected on his individual return except on line 7 for the wages.
Right. Yep.
So it's, everybody's asking for his tax return, and that would be very interesting, but which tax return? I'm sure there's hundreds of tax returns that he would file, because each corporation would file his own C Corp, or 1120S, or maybe there's some fiduciary returns and trusts. It all depends on which tax returns. So that's interesting. The fodder for getting everybody all upset this year is unbelievable.
Oh, it's ridiculous. If it was a regular person, me, my tax return would tell my whole story, basically. Mm-hmm. But he's so unique, and he is. Besides being Donald Trump, his whole tax situation is unique. You can't just look at his 1040 and say, oh, okay, this is where his money is, and da-da-da-da-da, because like you said, there's so many different caveats.
It'll say what his wages are, his interest and dividends, but it won't say about corporation number 400. It won't tell you about corporation number 100. There's so many pieces to the pie. Of course, I don't know. I don't know whether he has it all under a corporation or not, but I'm assuming that he would, especially the foreign corporations.
Right.
That's my assumption. I'm Esther Gulias, the tax lady, 803-0930, 803-0930, star 930 on the cell phone. And okay, we're going to talk about. By the way, if you're interested in schools, you can sign up online too.
Yep, you can sign up online, egtax.com. Call us during the week at 632-7886. If you're interested in the seminar, call the financial guys at 633-1515, and they'll take your registration right there over the phone.
Okay, so now let's talk about how different income is taxed. First of all, there's a lot of income that you can get that is tax-free.
Right.
That is tax-free. First of all would be social services and welfare benefits.
Right.
So if you're poor and the federal government is paying you to get from month to month to month, those benefits are completely tax-free.
Yep.
Federal and state.
Yep. Every type, your food stamps, your rental assistance, your child care assistance.
Right.
Yep.
Whether and if you're getting scholarships, it's all all tax-free.
Yes.
All right. Then there is some Social Security benefits. And why do I say some?
Well, because Social Security, first of all, is derived tax-free. It depends on all your other income.
So if your income exceeds $32,000 when you include half of your Social Security and you're married filing a joint return, or if half of your Social Security added to your other income is over $25,000 and you're single, right? Then the excess over that floor would be half taxable for your Social Security. And that's why people have to be so careful, because actually they can cause their own Social Security that might never have been taxable before to become taxable.
Yep.
Now, give somebody a real simple example of how you're rolling right along, your Social Security was never taxable, and then what happens?
Well, how about somebody passes away and you would take out you get their pension or IRA and you take it all.
Or you go to the casino. And get $10,000.
Yep.
Right?
Cash in those savings bonds that you had for 25 years.
So that's why if you're somebody that hasn't been paying taxes on your Social Security, you want to check with somebody before you get extra income, because if your Social Security wasn't taxable in the past, it may not be in the future if you do your planning properly.
Right.
Another thing that's tax-free is VA benefits, Veterans Administration benefits.
Yes.
Child support is tax-free.
Correct.
Reimbursements that you get from your employer, like let's say that they say to you, you bought a new stapler, give us the receipt, we're going to give you the money back for the stapler.
And that would mean you're on an accountable plan.
If you're on an accountable plan. If you're on a non-accountable plan, then it goes into your W-2.
Correct.
And then you have to take it off under 2106. All right? some payments around, I think it's $5,500 for education paid by your employer is tax-free.
Yes.
Lawsuit settlements for personal injury. You know, all the ambulance chasers, and they're saying, "Oh, did you fall down? Did you get this? Did you get that?" Give us a call. That money's tax-free.
I'm laughing.
Millions and millions of dollars can be tax-free.
Yep, I'm laughing right now because there's a commercial for one of those lawyers right now on TV.
I mean, they're good lawyers, and if you get the money, you're happy. And the benefit is it's tax-free to you. The other thing is inheritance of cash. I'm not talking about a pension. I'm not talking about stock. I'm not talking about real estate. But let's say Aunt Mabel leaves you $100,000 from her checking account. That's tax-free.
Right. Yeah.
Correct?
Yeah. So checking account, savings account. I mean, you know, if the estate cashes in the pension plan and then you get the check,
that's
tax-free.
Because the estate is paying the taxes
right.
first. Life insurance.
Paid about death is tax.
Payable upon death. Well, actually, if you borrow against it, it's tax-free too.
Yeah.
Right? Any loans that you take is tax-free.
Correct.
Sale of your personal residence, if you've lived in it 2 out of the last 5 years. The first $250,000 is tax-free. If you're single, $500,000 if you're filing a joint return. Reverse mortgages. If you're somebody that says, gee, I would really like to take advantage of a reverse mortgage, have them pay off my mortgage and give me my equity, that's completely tax-free, and you get to live there for the rest of your life. Until you leave that residence, it's yours and it's tax-free. And then the last thing I have is sale of personal items at a loss at a garage sale. So you have your old 18-inch TV and you bought it for $200 and you're selling it for $25. That's tax-free. Even though you might have had a garage sale and had $1,000 in sales this weekend at your garage sale, since you sold it all at a loss. In other words, you bought the blouse for $30, you're selling it for $10. It's personal property, and therefore it's tax-free.
Yes.
Right?
Yep. Goes with your car,
I'm
too.
Esther Goulias, the tax lady from EG Tax. I know we have Frank and Larry holding. We want to talk to you on the other side of the break. 8030930, 8030930, star 930 on a cell phone, and we'll be with you guys on the other side.
Attention real estate investors. Thinking of selling investment property? Pay no tax. Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists. For a free consultation on how to pay no tax when selling investment property, call 675-1500 or online at rjgullo.com. That's 675-1500 or online at rjgullo.com.
Hi, this is Esther, and let me tell you how great it is to have an insurance agent like Nationwide's Bill Barber. Bill's 40-plus years experience has saved me money on my premiums and potential claims. Have an insurance question, problem, or crisis? Bill will work with you personally without calling an overseas customer service number. All I can say is whenever I need someone on my side, I'm glad to have Nationwide's Bill Barber.
For all your insurance needs, call the Bill Barber Agency at 688-2199. Call 688-2199 today.
Nationwide is on your side.
This is Attorney Dennis Kitchen. Do you have a will? You may say no because you've never had one written, but in that case, the state law determines who gets your property after you die. Wouldn't you rather decide that yourself? Then you should call my office about writing a will. We can also explain living wills, powers of attorney, and suggest other ways to preserve property or transfer it to loved ones. I'm Dennis Kitchen, and I'd like to help.
For wills and estate planning, call attorney Dennis Kitchen at 716-631-5661. The heating season is here. Wentz Propane and Oil wants you to stay warm. Call today to schedule your delivery and get $100 off your next delivery if you refer a friend. Call Jack today at 731-9826 or 731-3015. Mention EG Tax for a special discount. Call today, 731-9826. That's 731-9826 for Wentz Propane and Oil.
Well, EG Tax is open all year, and we do more than taxes. We do payroll, bookkeeping, budgeting, retirement planning, corporate business setup, offering compromises, and we even have a New York Health Navigator on staff. EG Tax was thinking of offering oil changes on cars, but then we thought we better just stick to what we do best. So for taxes and much, much more, call 632-7886 or click EG Tax today. Come join our family.
Esther Gullius, the tax lady from EG Tax, and we want to help you with your taxes, any tax question. You know, let's face it, the money you get, it can or cannot be taxable, and that's what we're talking about today, about how different items are taxed and how so many things that you think might be taxable isn't taxable, and how to kind of I guess I would say the word manipulate, but that's really a good word, to manipulate the situation so that you can take advantage of it to make it not taxable.
I like to say use the gray area.
Right. But, you know, obviously it's like we were talking about, if somebody didn't have taxable Social Security and their son said, gee, Mom, can you cash in my $10,000 winnings on the lotto here, and she puts it on because you don't pay taxes, it would make her pay taxes and it would make her Social Security taxable. So those are one of those things that she would say, let me check with EG Tax. We would say no. Then she would say no. They said no. So because it'd probably be cheaper for him anyway. Let's go to the phones. We're going to talk to Frank. Hey, Frank, how are you, sir?
Great, and thank you for leading right into my call with your comment on the gray areas and manipulate. You just laid out a list of about like 25 or 30 things that I would never know whether they're taxable or not. I feel like I have to have a tax accountant follow me around to understand it all. But
okay.
So I wanted to ask you about the debate the other night, because Donald Trump and Hillary Clinton got into taxes a little bit. And two things. Trump's comment about the businesses leaving to go overseas. Now, are they going overseas for cheaper wages, or are they going over for lower taxes? And then
I think both.
When Trump said he doesn't pay any taxes, and he said that's a good thing, he's talking about manipulation and the gray areas, correct? But Hillary painted out that he's a bad guy because he doesn't pay taxes.
Okay, well, let me tell you first of all, what he said is if you don't pay taxes, you're smart. And technically, if you don't pay taxes, you are smart because you've manipulated as much as you possibly can. And I'm sure that there are many of his corporations that don't pay taxes at all because of depreciation and things of that nature. What somebody doesn't understand, what people don't understand, is how complicated taxes are. For instance, he might have bought a $100 million building, okay, and the depreciation on the $100 million building might be $350,000 a year. But he bought the $100 million building, okay? And so he gets to write off systematically over 39 years this depreciation, this write-off. So even though he would have paid taxes on the money, on the $300,000 that he's using as a write-off, because of the depreciation, it shelters it. But then when he goes to sell the asset, the only thing he can do is exchange it for another asset or pay the taxes. So believe me, at some point in time, you pay the piper. Because I don't care how good you are at taxes, at manipulating the situation, at some point in time, you end up paying some liability. The other thing is, you know, I really am not a Hillary fan, and when I watched with bated breath the other day at the debate, and I only wish that Trump would put a sock in it. I do. I wish he wouldn't say some of the things he does. I think he thinks that he's being cute, but it's not the time to be cute when he's up there debating and being tongue-in-cheek, you know. But, you know, I wish I had a chance to look at his tax returns, because I'm sure he's paying taxes, but he's probably doing a very, very good job utilizing all the things that he possibly can to reduce his tax liability. And when he's offshore, that's another example. If he has corporations offshore, he would like to bring the money back. It's for instance, when Trump is talking about bringing the businesses back into the United States, it means his own businesses too. But you can't even bring your money back to the United States because all the income is subject to U.S. taxes. And so that's a problem. And if we'd like the money to come back, we have to give a vehicle to do that. So
it just seems it's so complicated for
well,
us.
it is complicated. I can presume his is really complicated.
And
you don't have no idea that they could be right or wrong. We don't know because it's so complicated.
Right. And one thing, Frank, is too, it's not just Donald Trump taking advantage of and manipulating the tax law to his side. It's everybody out there that's doing it. There's people in middle class that are doing it, in lower class that are doing it. It's and
there's a lot of major corporations, you know, that aren't paying. A lot of the banks aren't paying taxes, but they're not running for president, and it just makes it sound like he isn't patriotic. Well, he has paid more money running for president than he could have ever paid in taxes because he has spent a lot of his own wealth doing it. But I wish there were a way that we could make it palatable. But when somebody hears that maybe he isn't paying a lot in taxes, which we don't know because we haven't seen his return, who knows what the situation is, you know. But great call, Frank.
Oh, we lost him. So
we lost Frank.
Yes.
All right, we'll go back. I'm Esther Gullius, the tax lady from EG Tax, and we're going to go to Larry. Hey, Larry.
Hi, Esther. Thank you for taking my call.
No problem.
Esther, I'm 67 years old. I am retired. I have a 401k with one of the local big box type stores that my options are either liquidate it or transfer it to another qualified 401k program or cash it out and pay penalties. The majority of the 401k is in the stock program. Mm-hmm. I'm concerned about the ease of taking the distribution requirement at 7.5 when it's involved in a stock program. Are you not subject to the whims of the market at that point?
Well, yeah, because when you have when your pension plan is invested in whether it's cash or stocks or a combination of both, it's the value of that account. Let's say it's worth $200,000, and you say, I would like to take $1,000 a month. It may be worth $200,000 when you're retired. If the market went up, it might go up to $250,000. If the market goes down, it might go down to $175,000. But that doesn't preclude you from taking out your $1,000 a month.
But in order to take out the $1,000 a month, stock would have to be liquidated in some way.
Right. Well, but that's what they would do. Is they would obviously sell enough stock, or if you have cash, take it out of your cash portfolio. But it's going to rise and fall based upon market conditions.
So for the sake of predictability, then perhaps.
But none of that's taxable, though. You have to understand, it's not like you're going to pay capital gains and be taxed on the distribution. You're only going to be taxed on the distribution.
Right. So for predictability's sake, then it could be easier to just perhaps transfer it into a cash account of some sort with a modified institution. Is that? Well,
I mean, but if you put it in a cash account, Larry, then you're going to be locked in at maybe interest rates of 0.03, 0.05, 1.25, and so you would lose the appreciation that you might have gotten in the market.
Okay. Yeah.
You're guaranteed a little bit of not income, but an increase if you keep it in cash. Where the market, you could go up 5% one year and down 2% the next,
right,
and up
and
3%.
That's the volatility of the market,
Yeah.
But if you put it in cash, all you're going to do is get either money market rates or you're going to get a CD rate, and that will be very low right now. And if the Fed, obviously, the financial guys, I was listening to them the hour before, they were talking about if the Fed starts raising rates, then that's more desirable for people who are in the market, and they might move from the market back into safer vehicles, and that could hurt the market, and that's why everybody wants to make sure that they do it slowly. Okay?
Yeah, I think you've...
Thank you, sir. We're going to break for the news. I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on the cell phone. We're talking about how different items are taxed, and we'll see you on the other side of the news.
From the WBEN Newsroom, I'm Mike Baggerman. Here's your top stories. A fight broke out during a funeral in West Seneca. The incident happened at St. Matthew's Cemetery on Friday afternoon. Police say a group of people slashed the tires of a van and also smashed its windows with a baseball bat. Then the attackers tried to harm the driver. A 17-year-old girl was injured in the fracas and taken to the hospital. Police and cemetery staff oversaw the conclusion of the funeral. 17 players were released from Sabres training camp today and either loaned to the Rochester Americans or sent to the AHL's training camp. The full list of players is online at WBEN.com. New York still ranks second worst among states' business tax claimants by the tax foundations. The foundation says its annual scoring penalizes states for overly complex, burdensome, and economically harmful tax codes and rewards them for transparency and neutral tax codes. New York has low rankings for individual income taxes, property taxes, sales taxes, and unemployment insurance taxes. From the WBEN Newsroom, I'm Mike Baggerman.
One great station, one great dial position, no confusion. News Radio 930 AM, WBEN.
You know, the cost of education can be expensive, costing thousands of dollars. What if you could qualify for a totally free course of study, culminating in the ability to obtain a certification which is sought after anywhere in the U.S.? Well, then come join our free tax school. Our hope is that you'll love doing taxes as much as we do. So if you want to spend winters in a warm environment, summers off, and autumn in tax school, this opportunity is ripe for you. Call EG Tax at 632-7886. Come join our family.
When Esther updated her kitchen and bathroom, she chose the Granite Shop. They were reasonable, professional, and best of all, they were done in less than 2 weeks. Can't ask for anything more. The Granite Shop offers countertops in granite, quartz, and marble. Call 402-1046 or online at graniteshop1.com. Their showroom is located at 2045 Niagara Falls Boulevard in Niagara Falls, New York. When you call or visit, mention EG Tax and your sink cutout is free. Call the Granite Shop today, 402-1046.
People often ask me or my coworkers about how their investments are going to impact their tax return, and we always would say, consult your tax advisor. Well, I have great news.
This year, EG Tax will have one of our senior tax accountants, Dana Bobowitz, EA, who will work inside the Financial Guide's office on Main Street in Williamsville.
Together, we will be able to meet all your financial needs in one appointment.
We just made it a lot easier for you to come join our family.
Call 633-1515. That's 633-1515 to make an appointment.
Investment advisory services offered through Blackridge Asset Management, LLC. Securities offered through Peak Brokerage Services. Member FINRA SIPC. Blackridge Asset Management, LLC and the Financial Guys, LLC are not affiliates of Peak Brokerage Services. Offices located at 6631 Main Street, Williamsville. The heating season is here. Wentz Propane and Oil wants you to stay warm. Call today to schedule your delivery and get $100 off your next delivery if you refer a friend. Call Jack today at 731-9826 or 731-3015. Mention EG Tax for a special discount. Call today, 731-9826. That's 731-9826 for Wentz Propane and Oil.
This is Attorney Dennis Kitchen. Do you have a will? You may say no because you've never had one written, but in that case, the state law determines who gets your property after you die. Wouldn't you rather decide that yourself? Then you should call my office about writing a will. We can also explain living wills, powers of attorney, and suggest other ways to preserve property or transfer it to loved ones. I'm Dennis Kitchen, and I'd like to help.
For wills and estate planning, call attorney Dennis Kitchen at 716-631-5661.
Star 930 is cell phone. We're talking about how different things on your tax return are taxed. We'd love to hear what you have to say. Give us a call here in studio. We want to talk about tax brackets. I think people really have a misnomer about tax brackets. Your tax bracket is determined after your income is derived, reduced by your itemized deductions, reduced by your personal exemptions. Then you come up with a number, and that's compared to they compare it against your filing status. So if you're single, you pay at one rate, head of the household, you pay another rate, married filing joint at another rate, and married separate at another rate. So I have a kind of an example here. Let's say that your income is $250,000, and I use big numbers because I thought it makes easier for you to see. In your itemized deductions are $40,000, your personal exemptions are $8,000. Your taxable income then would be $202,000. You would then go to the tax rate schedules, and at $202,000, you find out that if you were single, you'd pay at 33%. If you're married filing a joint return, you'd pay at 28%. Same thing with head of the household, 28%. Married filing separate would be 33%. So you find out that somebody who's in the wrong filing status pays an extra $10,600. And believe me, that's simplifying it, but that makes it pretty clear and helps you to understand.
Right, and let's get another misconception out of the way about tax brackets. How many times have we heard people say, I don't want to work overtime, or I don't want that second job because I'm going to get, all of it's going to get taxed at the higher tax bracket because I'm going to jump brackets. And that's not true at all. It's
not at all, because it's graduated, right?
Right.
The first bracket is at 10%, then 15, then 25, then 28, then 33, 35, and then 39.6. But each one of those, you pay the first level at the low rate. Then the amount of income you have over that at the next rate. Then the amount of income you have over that plateau at the next rate. So let me give you an example. Married filing a joint return, you stay at the 10% bracket at $18,475. Remember, that's after personal exemptions and itemized deductions. Then the next level, you'd pay 15%, but only on the excess over $18,475, and that goes all the way up to almost $75,000. Then the next level over $75,000 would be taxed at 25% until you get to $151,000. So you can see how it goes. The other thing is that people don't know is that's how your income's taxed. How about your deductions? How much do you get in your deductions, Chris, when you're in the tax bracket?
That's what, if you, sorry, whether you're talking itemized deductions, your adjustments on page 1 of the 1040, it's what tax bracket you're in. So if you're in the 25% bracket and you give $10,000 to your church, you're going to save 25% of that. So your tax savings would be $2,500.
Right. So if you give a $10,000 cash gift to the church and you're thinking, yes, I'm going to save $10,000 in taxes, not true. It's multiplied by your tax bracket. So if you're in the 10% bracket, you save $1,000. If you're in the 15% bracket, you save $1,500. If you're in the 25% bracket, you save $2,500. But you'd never get 100% because nothing's taxed at 100%.
No.
Until Hillary.
Even when you die, you're not taxed. Close,
well,
but
they're going to think about it. Yes, because it's going to.
And that, speaking of death.
Taxed and taxed.
Speaking of death, one of the things we came across this week was New York State and the estate tax on 706s, where you always hear us talking about if you're worth over $5 million, there's nothing you right, there's nothing you have to worry about, and then New York State's gradually catching up. But what people don't with New York State, and I had to play with it because it just, my mind couldn't really take it in because it didn't make sense. New York State, if their limit is $5 million now, and you go, your income, what you're worth
not
is
your income, your assets.
Your assets are worth 105%. So $5,250,000. You're going to pay tax. Your estate's going to pay tax on every cent.
There's no unified.
There's no exclusion, no exemption
on the state of New York. That's why people are moving out of New York State.
Yep.
Okay, why don't we go back to the phones? I'm Esther Gulius, the tax lady. 803-0930, 803-0930, star 930 on a cell phone. And let's see Brenda, who's been so patiently waiting. Hi, Brenda.
Hi, how are you?
Good. What can we help you with?
Okay, I came in on the tail end. In fact, I just left the airport watching the Bills take off. So I just, and I was listening, and the thing about Trump came up about his taxes. Now, here's the thing. It's not anything, I'm not arguing about anything, but I remember that when I was watching the debate and they were talking about the taxes, and I remember thinking to myself, why is he able to get away with saying that he was smart by not paying his tax, or smart about his taxes? And I said, and if I said something like that, they'd be on me like, Like
White on rice.
White on rice.
Why is he able to get away and not show his tax thing? Where I was married up until 2014, and the first year I could file my husband. Now this last tax for this year, I had to pay $1,000, and I'm like, wow, it seemed like you're penalized when you get married and you live, because we had it where we would get a little money. It wasn't that much, but we would get a little back. And I said, wow, I lose my husband. I said, then therefore I go to another bracket.
Well, you know what? That's
we
were talking about how
all over.
Tax.
It's just like if you lose somebody in your family. Like my parents, it doesn't affect you, but once you lose your husband, everything, everything changes.
And that's what we talked.
In my example, when you move from married filing a joint return to single, the tax brackets tighten up on the single person, and they pay at a higher rate than somebody that's married filing a joint return.
Yeah, 30.
So the whole thing is the tax code is not fair. It is very complicated, and that's why we do these shows, to try to help people, because to help you understand how the taxes work. And I understand this year when you got stuck with a $1,000 bill, we really don't know about Donald Trump's return, whether he paid $1 million, $2 million, nothing, 10,000. We really don't know, but I understand where you're coming from. You go from married filing a joint return to single, and now you get stuck with a liability. And that's because all of the tax code is written around if you're married, single, head of the household, a widow with dependent children, or married filing separate. That's how the code is written. So depending upon what your marital status is, determines about many times what tax bracket you get preferentially.
Maybe I should start a thing to get widowed with no dependent children and have another bracket.
I know. Well, hey, what? This is how bills get changed. You should talk to your congressman, and because it is true that unless you have a qualifying child, you go from being married filing a joint return back down to single taxpayer if you don't have children.
Yep. And this is why all the time we offer free consultations. You'll hear our commercials. You'll hear us on the radio. When life hits you, give us a call, because that means your tax return is going to change.
We won't hit you, but we're going to try to have the IRS not hit you, too.
Yeah.
Okay, dear?
Yeah, thank you so much.
Thanks for calling. I hope you had a good time at the airport, wherever you went.
Well, yeah, I was standing and watching them board the plane, and they, I didn't even know it was them. I just saw a plane. I said, I'm going to go get a shot of this plane. And then I happened to see guys getting, I said, wait a minute. And I asked the guy, is this the Bills plane? They said, yeah. So I watched them.
Board on their plane to New England, to Boston.
Right? They're going out to Foxborough.
Yep.
Yeah, they're going, and
they can go. I'm hoping they're going. I was just talking to my granddaughter about that, about how, do you think they'll win tomorrow?
He's posting some pictures on Facebook, but it was watching them. Okay.
Hey, thanks for calling. I'm Esther Goliath, the tax lady, 8030930, 8030930, star 930 on your cell phone, and we have Dave. Hey, Mr. Dave, how can we help you, sir?
How are you, young lady? How you doing?
What can I help you with?
Can you hear me okay?
Yep.
Okay. Esther, I've been pulling my hair out, whatever little I have left, about an issue with my wife. Now, I've been trying to hold her off, and I've successfully been able to do so because she wanted us to apply for Social Security when she was 62. Now, she's turning 66. She's maxing out now. But the problem here is that they're saying here, when she applied for Social Security in 62, the feds are telling her that she doesn't have enough hours because they're missing a portion of the work that she had for a stock company. Now, I know she got it. I know she worked because she received New York State unemployment insurance at that time. But they don't have a record of it.
Okay, but unemployment is not wages.
Well, no, but unemployment is based on wages.
Right, but was she self-employed, or did she get a W-2?
for a stock firm at that time.
Right, but I know a lot of stock firms treat people as self-employed. So if on her tax return she showed zero income or a loss of income, that's why they're not showing anything for Social Security, because she didn't pay anything in to Social Security.
So let me give you an example, Dave. Let's say that she had, let's say she had income of $15,000 from being a stockbroker that year. But when she listed all of her expenses on a Schedule C, if she was self-employed, let's say they came to $16,000. So she had negative taxable income of $1,000. Net profit of $1,000. That would mean that she didn't pay any FICA, and that may be the problem. What I'd suggest you do is to show us the tax returns that you guys filed that year, and let's look at her Social Security statement, and if there's anything that they're reading incorrectly, they will fix it.
Well, my question to you is this, okay? I don't have the time. I know I could go by Freedom of Information Act and all the hours and stuff like that. Is there any way that you could help me out with this, perhaps?
Well, that's what we're saying, is if we could see her statement. And so let's say there's a gap missing. 2004, there's no wages. We'd like to look at the 2004 tax return, and we can show them here was her wages. And there's no charge. Just come on in, make an appointment, and we'll be very happy to help you.
But wouldn't it be on them to make themselves prove?
Nope.
See, here's the thing.
The records?
The burden of proof kind of rests with the taxpayer. So you want to make sure that you're proactive, because who's going to get hurt? You.
Right.
And that's why they always mailed out those statements on a yearly basis for your review to start questioning it right then and there, so you have all the information.
Unfortunately, this is before I got involved in the situation here.
Well, if you want the help, we're happy to help you.
I got
632-7886. We'll be very happy to help you, okay?
Okay, guys.
Thanks, Dave. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 to cell phone. We're going to take a short break. We'll be back with more about your taxes.
Looking for a career where you're only working 3 months a year, especially when those 3 months are during the winter? EG Tax is looking for entry-level tax professionals in a well-respected critical industry at no cost to you. That's right. Our free tax course is starting soon with a location near you. If interested, please call 632-7886, 632-7886, or click egtax.com. Come join our family.
Looking to redo your kitchen or bathroom countertops without spending a fortune? Well, look no further. The Granite Shop has it all. Granite, quartz, and marble, with prices starting as low as $39.99. Mention EG Tax, and your sink cutout is free. Their showroom is located at 2045 Niagara Falls Boulevard in Niagara Falls, New York. Call the Granite Shop, 402-1046, or visit online at graniteshop1.com. That's 402-1046 for the Granite Shop.
Hi, this is Esther, and let me tell you how great it is to have an insurance agent like Nationwide's Bill Barber. Bill's 40-plus years experience has saved me money on my premiums and potential claims. Have an insurance question, problem, or crisis? Bill will work with you personally without calling an overseas customer service number. All I can say is whenever I need someone on my side, I'm glad to have Nationwide's Bill Barber.
For all your insurance needs, call the Bill Barber Agency at 688-2199. Call 688-2199 today.
Nationwide is on your side.
The heating season is here. Wentz Propane and Oil wants you to stay warm. Call today to schedule your delivery and get $100 off your next delivery if you refer a friend. Call Jack today at 731-9826 or 731-3015. Mention EG Tax for a special discount. Call today, 731-9826. That's 731-9826 for Wentz Propane and Oil.
Hey, this is Esther Golias, the tax lady from EG Tax. We got maybe 10 minutes left together. 803-0930, 803-0930, star 930 on a cell phone. Okay, we're talking about kind of how your tax return works and what's taxable. You know, so after you come up with your tax bracket, and they tell you what you're going to pay in taxes. Then they say, wait a minute, maybe we're going to let you not pay taxes. So after you come up with your tax bracket and your tax liability, then they reduce it by credits, right, Chris?
That's right. And as my wife likes to say, there's Pac-Man credits and Energizer Bunny credits. There's the refundable and non-refundable credits.
Right. So the refundable credit means that they're going to give you the money back. We're going to talk about that later. But the non-refundable credits, these would be things that are just going to take what you just determined what your liability was, and they're going to reduce the liability by these credits. So one example of these credits might be an energy credit.
Right,
Chris?
Yep, new windows, doors, furnace, insulation, even solar panels that you're putting on your house. That's a different energy credit than the items I was just talking about.
Right. Now, the solar credit is a big credit.
Yep, 30%.
Right. So that's a 30% credit of what you paid for the passive solar stuff. But the household energy credit is $500 lifetime.
Right. And
all that does is reduce your tax liability. Another non-refundable credit on the federal is the child or dependent care credit, right?
Correct. Yep.
But it is refundable on New York State.
That's right. Yep. So if you don't need it on the federal, make sure you do it on New York State because they're going to give you money back.
The money back, right. So this means that they pay you for the credit even if you have no liability. Adoption credit. That's a great big credit for people that have adopted children. Even if they didn't pay for the adoption because it was a special needs adoption, maybe it was a distressed family and you took in 2 kids and because of the parents' situation, even though you didn't pay the money, the credit is over $10,000 per child, and that reduces your tax liability.
That's right. Yep. So you used to get it back as a refundable. They changed it back to a non-refundable, but you get to carry it forward to help you.
Right. And then there's the child tax credit. That's for children under the age of 17 that are living with you and are your dependents or would qualify as your dependents. So you would get $1,000 per child under the age of 17, and if that reduces your liability down to nothing and you had at least $3,000 in wages, it becomes refundable.
Yep.
Right?
Yes.
So, and then the other thing is business credits. If you're a business person, you hired special employees and you qualify for some of the business credits. So these are all examples of non-refundable credits, but it takes your tax liability and reduces it by those credits. So if you had a tax liability of $10,000 and you have credits of $5,000, now your new tax bill becomes $5,000.
Right.
Right, Chris?
Yep.
Okay, so then we go from credits to new taxes. There's a section after credits where they tax you on that you have an increased tax liability, and that would be things like self-employment taxes, right?
Yep, self-employment.
Penalties for taking money out of your pension plan before age 59 and a half.
Or penalty for not taking out of your pension plan when you're 70 and a half.
That's exactly right, because for your RMD. So these things then increase the liability, and then you get down to the bottom, and then that's where the refundable credits are. And that would be things like the balance of the child tax credit that you weren't able to use, the earned income credit, if you pay too much FICA because you work at more than one employer.
Yep, the education credit.
The
refundable part of the
AOTC.
AOTC.
Of the education credit. So that's kind of how the tax return works, right, Chris?
Yes. Yep, the fast flow of the tax return.
That's exactly right. So now, different types of income pay taxes at a different rate. Regular tax liabilities on wages and interest, rental property, pensions, gambling, alimony, miscellaneous income, self-employment income without regard to your FICA is just taxed at a regular tax rate, right?
Yes. Yep.
But there are other forms of income that's taxed differently, and that would be qualified dividends, right?
Qualified dividends, long-term
capital gains.
Yep. Social Security, which we talked about a little bit earlier ago.
Yep.
Then the dreaded AMT that everybody's afraid of.
Right.
Yep. Which, and the moving from a traditional to a Roth IRA.
Right. So if you were to roll over from a traditional IRA to another traditional IRA, then it wouldn't be taxable at all. But if you move it from a traditional IRA to a Roth, then it's fully taxable. So different types of income are taxed differently. The qualified dividends are taxed at what rate, Chris?
Qualified, depending on what tax bracket you're in. If you're in the 15% or lower, you pay no tax on the qualified dividends.
How about capital gains?
Capital gains, same thing. And
Social Security?
Social Security, that depends on your income. So if you're in the 10% bracket, you probably aren't paying tax on your Social Security.
Right.
So
that's the other thing. So that's how that income's taxed. And then deductions and credits that you can create. You can create, especially when you're doing your RMD, your own pension plan distribution of taking money out of your IRA to make sure that you don't overpay. We see all kinds of people that are not paying any income taxes. They have an IRA sitting there, and they wouldn't pay taxes on the first $21,000 because they're over the age of 65. Part of what we do at EG Tax is show you how to take that money out tax-free. Right, Chris?
Right. Try, help you understand the ins and the outs, when you should do it, when you shouldn't do it. Someone the other day said, I'm $40,000 in debt, but I'm 50 years old. I want to get out of debt before I retire. I want to take it out of my pension plan. Absolutely not. Absolutely not.
Right, because your pension plan is protected by New York State. And the truth is you should negotiate to get out of the credit card debts. You should look for any other ways, but not take it out of your pension plan.
Exactly.
Right?
Yes.
Okay. Do we have Dave back on the phone?
Different Dave. It must be the day of Dave's.
Wow, the day of Dave's. Hey, Dave, this is Esther. How can I help you?
Hello. Thanks for taking my phone call. I'm calling. I own farms, and I own a lot of farm machinery, but I quit farming the farms about 18 years ago. I'm an old guy, and I lease out the farmlands. I'm wondering if I had an auction to sell all this farm machinery at once, am I going to have to pay, income tax on it or something?
Right. Why don't you tell Dave how 1245 properties recaptured, Chris?
Right. Yeah. Unfortunately, no matter how long you've had it, it's still, you're going to have to pay tax on the difference. Depending on what the book value for taxes was, those equipment were left. So maybe you had a tractor and on your tax return it was still worth $10,000 18 years ago, and you stopped using it. But now in the auction you're selling it for $5,000. You actually don't have that's a loss. That's not a gain. So we have to go back for you to your last tax return where you had those farm equipment that you were depreciating to see.
So, but now let me give you the flip side. Let's say you had a tractor though that was fully written off. You got all the benefit for it on your farm, and now you sell it for $5,000. That ends up to be a $5,000 gain. Okay, so what Chris is saying, we have to go back and take a look at what all of those assets were worth. Were they fully depreciated? Were they not fully depreciated? If you hadn't written it all off, he's absolutely right. You end up with a nice loss on your tax return in the year of sale. And one thing will offset the other. So, and it makes sense that you wouldn't let it just rot in your driveway, I'll tell you. So let's just say that you can get $40,000 from the sale of your equipment, and you're in the 10% bracket. It may cost you $4,000 in taxes, but you net $36,000 after you sell everything.
Okay.
Okay? So give us a call. We're very happy to help you, Dave.
Come on. All right.
All right? I'm Esther Gullius, the tax lady. If you need us during the week, give us a jingle, 632-7886. Visit us online at egtax.com. Have a great week. I love you. Bye-bye.
Albinger.